Your credit score is made up of different data points from companies that are reporting your payment histories to the credit bureaus. Using these data points, the credit bureaus calculate it into your credit score. It's a three-digit number, and the main purpose of it is for lenders to understand and evaluate how safe or risky it is to lend you money. So, what makes up a credit score? Payment history makes up 35% of your score, and it includes any payments you make on time, your late payments, and your public records. If you have open credit lines, there are dates in which your statements need to be paid. Before the statement date, you can pay in full, or you can make the minimum payment. It's best to pay your debt in full every month before the statement is due. Credit utilization makes up 30% of your score. FICO considers the proportion of cash owed in comparison to the amount of credit you have, and this is called your credit utilization. All in all, you might not have a lower FICO score if you have more available credit than you do debt. Your credit utilization is calculated based on your total outstanding balances compared to your total credit limit on all the lines of credit accounts you have. Try to keep your utilization less than 30% of any single card or line of credit, or else you may get penalized. The age of your credit history is simply how long your accounts have been open and have been active. Usually, the longer a person has had credit, the better their score is. The FICO score depends on how long your oldest account has been open, as well as the age of the most recent credit line. A good rule of thumb is to keep old unused credit lines, because closing these accounts may possibly hurt your score. If you open a new credit line, it's considered new credit, and you will receive what's called an inquiry. The combination of new credit lines and many inquiries can really hurt your credit in a bad way, so try not to do so. Mixing up your credit is a great way to build your credit as well. A good mix can include credit cards, mortgages, other personal loans, and auto loans. Hard inquiries are used to approve credit lines and will deduct points. Some examples are applying for credit cards, auto loan applications, student loan applications, mortgage applications. Soft inquiries are used by individuals to check their own credit score, or by current lenders who are reviewing your credit report. But usually it's just checking your score, background checks, and pre-approvals. When it comes to monitoring your credit, there are many free and paid sites you can use to pull your credit report and see your score. One thing to keep in mind is that these sites are using different systems, so your credit score may be calculated differently depending on the site. FICO, for example, says payment history is 35% of your total score. It's the most important part, and one missed payment can cause your credit score to take a big hit. VantageScore, however, doesn't weigh payment history as high. Your total credit usage, like balance and available credit, is the most important factor in calculating your VantageScore. FICO scores are used by many lenders and often range from 300 to 850. A FICO score of 670 or above is considered a good credit score, while a score of 800 or above is considered exceptional.